Hello and welcome to Value Research Podcast. You're listening to First Page, a column written by Dhirendra Kumar. Retail investors and the derivatives trap. Small investors are bleeding 63,000 plus crore rupees a year in derivative losses and costs. SEBI has come up with a consultation paper on measures to strengthen index derivatives framework for increased investor protection and market stability. Translated into non-official language, it means measures to somehow slow down the rampant loss-making speculation by investors in index derivatives. A couple of years back, the regulator came out with that study that became famous, or infamous depending on your point of view. We learned at that time that some 89% of derivative traders lose money. We also learned other damning things about F&O gambling, but that was the headline view. Now we have this new paper which has a good amount of fresh data analysis as well as a slew of proposed reforms that aim to solve some of the problems that have been pointed out. While few readers will have the wherewithal to go into the nitty-gritty of the detailed analysis, I think the crux is this. For financial year 2023-24, 92.5 lakhs unique individuals and proprietorship firms traded in the index derivatives segment of NSE and cumulatively incurred a trading loss of 51,689 crore rupees. This figure doesn't include transaction costs. Further, of these 92.5 lakh unique investors, 14.22 lakh investors made a net profit, that is approximately 85 out of 100 made a net trading loss. Source: NSE data. The SEBI study referred to above found that over and above the trading losses, the loss makers expended an additional 23% of trading losses as transaction costs, while profit makers spent an additional 15% of their trading profits as transaction costs during financial year 22. After considering the transaction costs, the outcome for financial year 2024 will likely be very comparable to our financial year 2022 study, which found 9 out of 10 losing money. On the other side, it has been observed that larger non-individual players that are high-frequency algo-based proprietary traders and/or foreign portfolio investors, FPIs, are in general making offsetting profits. Please listen to that carefully once again. This is the heart of the matter. Almost all individual investors lose money, and that money goes straight to high-frequency algo traders, FPIs, and other similar entities. Some readers may be puzzled by the phrase offsetting profits because they may not know the zero-sum nature of derivatives trading. All profits come from someone else's losses. In fact, this is the case if we ignore costs. Once you take costs into account, they are a negative-sum game. The huge impact of costs is also made clear in the above quote from SEBI's paper. So that's the bottom line. The sophisticated, large operators are just taking away money from retail investors who keep losing in the illusion that they could strike it rich at some point. With costs, the loss quoted above was 63,600 crore rupees in 2023-24. That's the basic flow of money here. Small investors gifted away 51,689 crore rupees to large operators and paid an additional 11,888 crore rupees to the brokers and NSE for the facility of making these losses. Do you see where the economic interests lie? And do retail investors understand the unalloyed stupidity of just giving away their money? The question is, will SEBI's proposed measures make any difference? Many people are skeptical. My view is that there is never 100% success or 100% failure in such issues. If implemented, these measures will definitely reduce the tendency to do disastrous trades. The increase in ticket size will also mean that, to put it bluntly, derivative trading will be limited to slightly richer people, so hopefully they won't feel the loss as much. It's also possible that no significant change will take place and both punters and the industry will find a way around the new rules. Most of the proposed changes are efforts to modify investor behavior. This does remind me of Charlie Munger's quote on incentives from his famous Harvard speech. Show me the incentives and I'll show you the outcome. Will this change the exchanges and brokers' incentives? Will it change investors' incentives? Even so, I think there's a very important process that has started, which is to give derivatives trading a bad name. I do mean that. When someone gets into derivatives trading, I'd like the trader's family and friends to react in the same way as they would if that person were trying out drugs. This entire activity is gambling, which is an addiction. I hope that the narrative around derivatives trading changes to thinking of it as a dangerous and lethal addiction.